we'll let him break it down.
Are you
I
ready
was
to
going
hit
to press this
something?
button.
Okay. Welcome, Jeff.
Jeff,
How you doing? Welcome to the studio.
welcome. Come
Guys,
on in. There he
What's
is.
new? How you
Our
doing?
technology brother. Welcome
this
to the
is
show.
a life goal achieved. I feel like I'm like
Let's go.
Let's go.
no, I've seen this progress, and I'm just such a big fan of you both. And I won't flatter you for 20 minutes, but really, you guys are killing it. It's awesome.
Well, I remember, I think we got breakfast burritos in Santa Monica, like right around the time that we were starting the show. And you probably thought I was a little bit crazy for going full time on a podcast,
Yeah.
but you always had faith. I think you saw the potential from the beginning. So it's great to have you on, and maybe give a quick intro, and then I'll let you talk about the news today, and then we'll get into a bunch of other stuff.
Yeah, so I have been an investor, I guess, for the past 5 years full time. Started a firm called Chapter One. We call ourselves the product fund mainly because all of our backgrounds are in product engineering, design, data science, and kind of take a product centric view towards what we invest in. But prior to that, grew up in the Bay Area. Probably most famously as an operator, was the VP of product at Tinder for a bunch of years. Ran revenue over there, kind of during like the hyper growth period of 2015 to 2019 when the company was growing. And then now we're in the venture firm full time, and yeah, we've evolved quite a bit. And today we're sharing some of that news.
Amazing. What's the news? And we're not quite set up to have multiple guests on, but we'll have to have your new partner, new GP. So why don't you break down the news and kind of talk about the evolution of the firm?
Yeah, so the big news today is Jameson Seidel is being promoted to a general partner. We started the firm in 2019 when, there we go. I think it kind of marks a moment in time for us as a venture fund, but also maybe more broadly in venture. We started Chapter One as a solo GP firm when being a solo GP, I think, was pretty new, but also I'd call it trendy in 2019. And it's been just really interesting to see the peer group go in different directions. So people who were solo GPs at the time, some have continued down that path. Other people have gone back to operating. And then I think there's another cohort of people who want to build partnerships and firms. And so I think, there's all these right ways to do venture, whether it's building a firm, equal partnerships, solo GPs, and there's this constant debate. But I think we've really been clear on what we want to become. And today, building a partnership is obviously what we're announcing today.
That's amazing. Had this been your plan from the beginning? Did you realize quickly that you wanted investing at the firm to be a team sport versus something that was more of this, again, solo endeavor, at least like it was in the beginning?
I think a lot of us in 2019 really we had a plan, but it wasn't
There's concepts of a plan.
what we've become. And so I think I realized in like 2020, probably a year and a half, 2 years in, that I didn't want to just do it on my own. And I think there's a lot of people who are really happy with that lifestyle. And frankly, it's probably a better financial decision just to do raise funds, do it on your own. But I think to be competitive and to build a great product for founders, you likely can do a better job of that if you bring on partners and build a firm. And so that was the goal in 2021. It took a while to figure out who that person would be and also the right way to do it. So a lot of people will tell you to kind of like promote people from within, build, you kind of like people buy into the culture, they know what you're doing, and you kind of elevate internally. Then other people will say go find a superstar externally, which at times we also thought about doing. So do you want to go bring in like a fancy GP spinning out, or maybe a former CEO type, and those things are just really hard to get right. And so I think we were really lucky where Jameson was doing an outstanding job internally, bought into what we were doing, and it's kind of like a head coaching search, right? You guys kind of in the TBPN model, like it's really, I think, alluring to go hire like the big fancy head coaching name, but often times like promoting the person from within is the best move because they know your players trust them, and they know the system. And I don't know, maybe like the Boston Celtics did that really well, right? And so I think it's really, um, I think that's kind of the decision most firms have to make as they're growing their teams.
She's focused on, I mean, in her bio, she says AI, ML, infra. How you guys making money off of Stargate? There's 500 billion floating around. What's the angle? We were talking about just go set up a Chipotle there, become a
Don't just set up a
franchise
Chipotle.
owner?
Set up like the basically recreate the 2007 Chipotle in Abilene.
In Abilene.
Massive opportunity.
There's 357 workers there. But I mean, seriously, like obviously there's this AI boom. A lot of the trains have left the station. I don't imagine you're participating in the next OpenAI round. But how do you make money in the current AI boom, or is it or are we into like the next trend?
Yeah, I think there's a couple angles. Like one is location. So there's Jameson lives in London.
Mm-hmm.
And I think there's a popular narrative right now that all the value creation is happening in the Bay Area. And so obviously, I grew up in the Bay Area and I live in Los Angeles, and we've made a decision to focus kind of on the other most important areas in tech. And so, her view, and it's my view, being spending more time in London, is that there's actually a lot of talent in the universities, so Cambridge, Oxford, et cetera. And also, we had a conference in London maybe 2 months ago, and we had the founder of Granola, we had Anthropic, we had a lot of people from DeepMind, and
Is
so
the
I think
plan to
there's
help those founders like escape the backwater that is the UK and the Europe? Because I can't imagine that they're going to try and build businesses there, right? That's crazy. It's like insane. So like, but it makes sense because you go there, you give them money, and you tell them, here, go to San Francisco, because then you have an actual shot. Is that the plan?
I think I think it's a bit like there's like the Project Europe movement,
Yeah.
which obviously like love Harry and think that's
Yeah.
important, but there's another view is like meeting founders where they are today,
Yeah.
and often that is, hey, we want to raise a seed round and
Yeah.
go,
I mean, that's the
build the
story of
company.
Anthropic
Yeah.
and Granola, right? Like
Yeah.
international founders who eventually came to the U.S. There's always this question I have about like
There's also
capital
Sweden,
flows,
right?
Sweden's pretty goated, pretty good. If you
The
get over there.
Nordics, the Nordics.
Yeah.
There's something
There's
in
something
the water.
special.
There's something
but yeah, I mean,
brewing
there's
there,
always
yeah.
the capital flow. Like there are a lot of great LPs there that want to invest in American companies. There's a lot of founders that want to come invest in America. Obviously, there are some great companies in Europe. We're joking around. But getting that capital flow right, so you don't just expatriate U.S. dollars to underperforming countries, is probably a risk you want to avoid. But at the same time, it's probably really underpriced assets that are going to go find niche markets all over the world. And who knows? Maybe the next power law company comes from some bizarre country like
Do you
London.
have strong beliefs around the intersection of AI and crypto? There's been a lot of different attempts and people attacking it from different angles. You obviously have backed a bunch of crypto companies historically.
Yeah. How do we make money off of stable coins? Ben Thompson was writing about this today, how stable coins are going to power the agentic
joking.
web. And
It's
I want to get in on the action. I'm super long stable coins, but they haven't moved at all. My portfolio is flat.
No, it is a tough thing where everyone's just so bullish on stables, and yet it's kind of unclear.
Can we
It's
do like a
if
meme coin about
Coinbase
stable coin? USD on pump.fun. Just USD coins.
potentially.
Just 1 trillion
There might be
coins,
something there, John.
USD.
There might
It
be
should
something
be
there.
$1 eventually.
No, but more seriously,
it has zero fiat backing. It's just it completely
Exactly.
unbacked
It's just complete meme.
yeah, unstable coins.
Yes.
I think people have tried.
I think people have tried this. Everything's been tried, but seriously, like stable coins, what is exciting, or again, like with the Bridge acquisition, is that the end of the story or the beginning?
I think you're seeing a lot of app application layer payments applications that are using stablecoins to enable their payments, but there hasn't been a lot of value accrual to like net new Circle competitors or trying to compete with a Tether or USDC.
Yeah.
And so stablecoins are like the easiest thing to talk about at a AGM or LP conference because it's like, okay, like I can kind of see that use case. And so I think there's a shift to emphasizing stablecoins
Yeah.
today. I think the combination of like stablecoins and agents starts to get like it does make sense, but it's gets pretty blurry in like the current use cases of agents and what's possible today.
Mm.
Um, I don't, for what's worth, we don't have a strong belief on the intersection between crypto and AI today.
Hmm.
Being there aren't a lot of the primary use case we like is giving open source developers a way to actually make money. Like I think
Hmm.
that's a pretty clear thing that's been missing if you look at any open source ecosystem. So you look at I don't know, like Now's research or different like BitTensor's trying to do this a little bit too, but the yeah, I think the worlds are very separate today. If you go spend time in the Bay Area and actually talk to
Yeah.
the best AI researchers, like there's nobody cares about crypto in the Bay Area for the most part, and that's totally okay.
Yeah.
Like I kind of like that crypto's still very weird and unliked by most people.
Let's get Linus Torvalds a mega yacht. Let's get Guido van Rossum a private jet. This guy created Linux. Like Guido created Python, open source software. He didn't get comped.
Let's get him some stables.
Immense value.
Let's get him some greenbacks on chain.
Exactly. I want to talk about the venture dynamics for these mega platform funds and smaller funds. There was this trend during the ZERP era where it seemed like the mega funds were just preempting everything. You had the crossover investors, and that made it pretty hard for early stage investors to kind of make the decision on whether or not to write pro rata checks into into their earlier portfolio because they just wrote the seed check. Maybe they did find the great company early, but then there was this pressure to say, hey, these companies are graduating to Series A immediately.
Yeah, you want to defend your ownership.
Exactly. And so has that dynamic changed, or has the early stage market adjusted to spinning up growth vehicles so that they can ride that wave as the overall market gets hotter? I mean, some of these rounds for these AI companies, they get up Series A and 100 million, like happens pretty frequently now. And how do you set yourself up for that as a manager?
I think that's probably the hardest part of the 2019 to 2021 vintage, right?
Yeah.
And you look back at your follow-on decisions, and at least speaking for ourselves, I think that was probably the part of our investment we wish we could get back the most.
Yeah.
Uh, and so, right, like today, the markups are just as crazy,
Mm-hmm.
except there's obviously more revenue that you can kind of lean on to underwrite the companies, and so it's actually it might be harder today because you
Hmm.
have like before it's like okay, like Excel or Index is marking up the company. We did the seed, we should maybe do the Series A out of principle. Now it's like okay, one of those firms is doing it, plus they have 10 or 20 million dollars in revenue,
Hmm.
and so it's equally hard. And I think
Hmm.
for seed managers, um, the growth fund thing for seed managers is pretty much done from what I've seen. Like people
Yeah.
aren't going and raising growth funds, and if they do, they have to have a very special reason why they're the seed fund who can do both. So I think there's a lot more. Like we've seen SPV volume pick up again. That's become a bigger part of the ecosystem. And then I think a lot of LPs are looking for co-invest. Like that's always been the case, but especially so today. I think you see a lot of LPs coming to funds so they can co-invest, and that's I think a bigger trend today than
Hmm.
when I started in 2019.
What's the sophistication level when they're looking at co-invest opportunities? Are they saying, okay, I'm going to back an emerging manager, let's say a $30 million fund, and then I'm planning to do one or two take one or two co-invest opportunities per fund and really just try to get into those winners? Or is there more of a, we just want broad direct exposure? And, I'm curious what you've seen or what you're seeing broadly.
Yeah, I think it's both. Our preference is that you do broad exposure mainly because the odds of doing one co-invest and having that be
Yeah.
the right company are just extremely low. And
Yeah.
so we look, we don't do a ton of SPVs, but the messaging is always like, please don't overshoot on any single deal because if you're doing a Series B SPV, and we all know the amount of risk even at the Series B that, and especially today, like that's even more pronounced. And so, but yeah, I think
Series B risk is more pronounced now.
I think if you look at the amount of competition, the amount of change happening on a daily basis in just technology advancements, and then the pricing and size of these rounds, I would think if we look back 2 or 3 years from now, we'll say the Series B risk in 2025 was probably on par with the 2021 vintage. Would be my guess.
Calling a bubble.
No, it's crazy. I mean, I just see this having probably 60 plus different angel investments now. I'll get an update and see that a company is getting a markup, and I'm like, I don't really think like
they're there yet.
They've made progress.
Yeah.
Are they any closer to being a business that truly has the
Series
intrinsic?
B used to be like pre-IPO.
Yeah.
Like it used to be like, this is an extremely solid business, like within sight lines of like true profitability and like.
I think we need a new stock exchange probably in Texas just called Dogs, which is like venture back companies that like have a little bit of revenue, still got a lot of work to do. Let's just get them out in the public market. Let's let them trade at like $2-3 million, clear the pref stack, and then maybe they 100x, right? Maybe they figure it out, right? Yeah. So anyways,
well, what was that SPAC that holds?
There's
like
that one Destiny right now. I don't know if you've seen this.
Yeah.
Jeff,
the inverse destiny of the dogs, the companies that are underperforming private markets. You wrap all those into a SPAC.
Investors can kind of sell to
like
dogs, take a little bit of a loss,
but it has
and
such
then
a
penny
huge
stock,
portfolio.
and then you're like, maybe there's
pops.
one banger in here.
It's actually there's something there.
There's already businesses that buy
the bad
underperforming.
Stuff.
But this index Destiny, I don't know if you've seen it. They hold a bunch of basically SPV, like
they have like some look-through exposure to SpaceX, but they trade at like 10 times the underlying asset value.
Yeah,
that's crazy.
It's like people want access to those stocks, so they're going for it.
Destiny Tech 100.
Anyway, we'll build it out.
Last question I have: what's your updated thinking on incubations? I know there's some stuff in the works that you probably can't announce, but is part of bringing on a GP to free you up to kind of be able to spend a bit more time on internal stuff?
That's been a part of our strategy we want to expand on. I think we're doing one incubation, which I'd love to come on the show in like 3 months to announce. And it's partnering with a really big piece of IP, like a globally known piece of IP to build an application for that property. And so I'm really excited about this because obviously
Mickey
building
Mouse
software.
payroll software. It's Mickey Mouse payroll software for sure. It's
honestly good execution in payroll. You're at least $100 million company.
Yeah.
And so you slap some Mickey Mouse IP on that.
That's actually kind of genius.
It's Mickey Mouse payroll.
Just hyper commodity. Like you go after these markets that are just hyper commoditized.
Yeah.
And just say like, we're partnering with Disney. It's just going to be Disney themed.
Oh, you don't want the Batman VPN? Why don't you want the Batman VPN? You don't want the Dark Knight protecting you while you're browsing online? You're going to go with what? Nord? What's Nord?
Honestly,
why not
Jeff?
Batman?
This is your new playbook. You live in LA. Let's go on a
get
road show.
Yeah.
Let's build some enterprise SaaS meets
enterprise
legacy IP. Buying it for pennies on the dollar. You give them like 5% of the company.
Yeah.
Good to go. Anyways, I do know what Jeff's
What if
working
Tony
on,
Stark built your ERP? Iron Man ERP.
Stark
ERP. Stark Enterprises.
We're getting somewhere.
ERP. This is the
Jeff
future.
could actually run this playbook.
It'd be great.
I kind of love this.
Yeah, definitely come back on. I think
guys.
it's going to really break the internet when you launch it. So I'm excited to see it.
All right.
We'll talk to you
thanks,
soon.
guys.
Congrats
Bye.
again to the whole team. Cheers.